Hello, everyone. Welcome to today's session. Let's get underway here. You'll have to forgive me. I've got a cold. I think it might even be COVID for the second time. My daughter is positive and the rest of the house is sick. We haven't gone to get tested yet, but feeling kind of cruddy today, feverish and all that stuff. Hopefully none of you have had COVID. I got it pretty bad a couple of years ago. Ended up putting me in the hospital. So hopefully I'm all vaxxed up and ready to go. Got all of that, whatever it is that I need in my body. So anyway, I'm a little raspy and a little stuffy and sniffly. So we may cut a little bit short here. We'll see how long my voice will hold out. Let's jump right in here to market conditions. Current market conditions, we're still in a bull market, still working on this overall uptrend here. We've been just counter trending now for the last 3 or 4 months, and then had this massive run up last week, a huge run up, one of the biggest run ups we've had in a long time. And we'll talk about that because we had a couple things we were talking about leading into this. We're talking about buy sell ratio. We're talking about some really key support areas, several things there that had been happening. This major support area right here on S&P 500, and it held up, and it did hold up. And really, what was interesting was I think we had a couple of things unfolding. We had a lot of money on the sideline. I think there was a lot of institutional money that was just waiting for an opportunity, kind of waiting for a little bit of a hiccup in the bond market. So we'll look at that as well. So now we're seeing some pretty strong uptrend. This chart right here, sometimes it looks like a little bit of a mess, but there really is a story here. And right now what we're looking for obviously is we're getting sentiment, which is moving higher. We're getting momentum, which is moving higher. We're getting breadth, which is moving higher. The real advantage is when it comes to the edges, to the extremes. I talk about the extremes, or talking about the edges. What's happening at the edges? So now we're kind of past that. So now we're in that momentum zone. We're in that trending zone, and that path of least resistance should be up at this point, and we'll talk about that here as well. A couple different formations. So we've got momentum back up into the bullish trending zone. We've got breadth, which is still stuck in that middle range and kind of trending, not really in a bullish uptrend quite yet, but it moving that direction. Obviously, we can see that in this chart here, these oversold areas, and now we've broken back up to that upside. So we know that the S&P 500 and the vast majority of indices are really they're weighted, and so you end up getting a lot of the Magnificent Seven stocks and some of these big cap stocks like Apple and Microsoft and Amazon and Google and Tesla that end up moving the market more so than anything else. And that's part of the reason why there was such a huge run here on S&P 500. We'll look at a few different charts here as well. We're also seeing sentiment, which has had a nice bounce. So, once again, all of these edges have proven to be good locations for reversals. And we got another one here. This one turned out to be a little bit of a divergence where we had price activity, which looked like this. We had a low on this low on S&P, it rallied up, and then we had a new low. We didn't get that matching low there, that divergence starting to take place, or had taken place at that location, and that turned out to be a nice run up that we saw on equities. The indices or the indexes, either one has worked, is proper English. I actually had to Google that to see, is it indices or is it indexes? And both actually are fine. But the indexes tab here, one of the things that we were talking about the last few weeks is we just saw this buy sell ratio, which was horrendously negative. Now it's just really shot to the upside really fast. So this is a really significant week, this past week, and it's in terms of getting trends back on board, getting companies moving back into uptrends. And so pretty significant in terms of what's happened. We'll break this down. I'm kind of, typically I like to work from this top-down approach. We want to see what is the market doing? What's the overall direction of the market? This is that big picture. We know that we're at the upper end of a range. We've retraced that. We may have we're going to be dealing with, even if we get a nice rally, we're going to be dealing with a top and a top within this overall rally as it starts to solidify. But in that case, it's still moving higher, and so we want to focus on that overall trend. We also have the sectors ETFs, which have almost all moved back. We'll watch to see if any of these are looking good today. Sometimes you can it's just been a really sharp move. There's a handful that are not quite there yet, and that's okay, but the vast majority have moved back, either short-term trend up and the overall signal moving higher, and technology leading leading the way. Remember that the rank on these, in this case, the rank is measuring against other ETFs. These are exchange traded funds or ETFs. When we're looking at the sector scan, we're looking at the rank of 69, 61. This is measuring the rank of all of the stocks in this group. So the average rank of all the construction stocks right now are 69. So that is actually leading on average, because even though there may not be as many, it's got a nice buy-sell ratio, but not as big as utilities. Utilities got 66 stocks in uptrends, only 5 in downtrends or sell, and then 26 stuck right in the middle. But that ranking, and you'll probably see that start to piggyback a little bit higher. In fact, though, I was looking through some of these stocks today, and this one, GNE, has really been a high flyer. It's gone from 15 to 20, had a big move yesterday, and then another pullback today. We're seeing that on some of these stocks that are been moving aggressively higher. Is they're getting retracements, but they're seeing buying when they come back into these areas. This is now pulling back. You can see that tail bar, and so keep an eye on these muscle stock group. This is coming from the sectors and coming from the leading sector here, but a lot of these stocks are also just going to show up here in this muscle stocks tab. And as we scroll through some of those, you're going to see some of that also happening here on these stocks. CABA, LFMD starting to move higher here. There was one that was a good example of that one, hasn't quite moved yet. Cooper Tire, this one had that big gap. We talked about it a couple days ago. Big gap, a couple days. It's still extreme, but may want to continue that overall uptrend. COCO, CIFR, Beazer Home. A lot of these stocks now, we had 2 or 3 up days. They're just pausing, consolidating a trend right here, and that's good. That's what we want to see. So these are the leading stocks, that muscle stocks group. Keep an eye on those as they're moving higher, to be able to watch for some times of gaps. We're seeing oil pull back here a little bit today, and that's affecting a couple of the portfolios. The new buy portfolios had a few oil stocks that are in there that are starting to pull back, and we'll go in and look at those as well. But let's finish up on the indexes, the market ETFs. I wanted to talk about bonds right here as well, the TLT, and see what it's doing today. Okay, we've seen TLT now. It's gone from this really nasty oversold area. It's worked its way back up, and look what we're getting here. We're getting kind of this first inkling of some bond trend shifting. Okay, a bond trend shift going from this pattern here, from a downtrend, to breaking that, to reversing, and starting to make its move back up again. When stocks are in a downtrend and they start to reverse and move back up again, we're always at risk of whipsaw, and that is a false signal where you go from red to yellow back to green, and then it's just still in a downtrend. Okay, part of that is when you get these long-term downtrends, you get a counter trend up. It's just that, it's just a counter trend. So this one, still, we want to be a little bit cautious right here, but the more time we spend right here, we also know that the context of this price pattern going back a couple of years is really nasty. Like we're due for a pretty big run up. Even on this chart, we could see bonds run from this 88 all the way back up to 99 on TLT, which would be a pretty big move down in interest rates. And I think the market would really welcome that. One thing the markets hate is they hate uncertainty. And so as certainty is created, then then people will place their bets a little bit more aggressively. And bonds is the big is kind of that big one that's hanging out there of what direction should we go. And I think if we can get a rally here, we may get a short covering rally, kind of like we saw in equities, where we get this run up. Now we're sitting right at this 236 on the 1 year time frame. And so our next real level, you can see that next level is 92. So if we can hold this 88, maybe retrace a little bit, but then launch back up again, and it rallies higher, that could be, there's a big air gap right there in between this next support area, or right now it's resistance. If we can get up above it, hold that support, then it could go all the way back up to that 92 range. These are important ranges to be focusing on. Anytime you're looking at a chart pattern and you're using this fib snap tool to where it's grabbing on, in this case, to the highest and lowest trends points on the chart, in this case, it's a 1 year chart, it automatically is grabbing the highest point, which happens to be on this end of the chart, and the lowest point happens to be on this end of the chart. So it's just snapping those two together. And now we've got all of these different levels coming up that are going to act as a stair step. They're going to act as support and resistance along the way. So as we break up above one of them, this 88, what we'd want to see is a pullback or a retest and see that level hold. Once it holds and you see buying, and it rallies to that next one, maybe it pulls back a little bit there before it attempts a breakout on this end, and then it rallies and it retests, and now this becomes that floor, and then it rallies to the next area. And you can see a lot of times really closely these areas, if we were to extend the chart back or extend a line back this direction, okay, we're hitting a lot of major areas. So these Fibonacci zones, support, resistance, supply, demand zones, whatever you want to call them, that's what they are. They're areas where you're going to get some reaction, and they act as support resistance. So they're critical areas to be watching for. And in this case, on the downside, we're looking at it for moving higher. In the case of an uptrending stock, let's say we're looking at something like, this isn't a good example because it hasn't quite moved quite yet, but I do want to come back to this stock. Let's go to, here's a good example on a 6-month time frame. So now you have a stock that on this time frame, 6 month, we've grabbed this low, we've grabbed this high, we've got momentum moving this direction. Okay, now this is our support and resistance. We find support, it pulls back, it moves higher. In fact, DAKT, let me go back to that muscle stock group because that one was sitting right inside this zone. You can see where it's up in this upper range and it's just holding. Doesn't want to move lower, doesn't want to move higher. It's kind of consolidation, but it's still working its way this direction. That creates a higher probability trade that direction once it's already there. Okay, and then these market conditions. This is the market condition. These are market conditions that we want to be looking to go long, adding into positions, moving to the upside. And one of the things that we can use as our guide is the buy-sell ratio. Do we have a buy-sell ratio that's higher than 1? Yesterday it was 2. Today it's 1.77. So yes, we have a 2-to-1 buy-sell ratio now, which means we've got twice as many buys as sells. We also have a whole bunch of stocks stuck in that hold range. So if we get one more leg higher, it can move a bunch more stocks from hold to buy, and then we get a really solid buy-sell ratio. It can, it can waffle a little bit. We know that we get some times that are looking like this, but after this much time to the downside, and we had all this bearishness, and we started moving aggressively back this direction, I think that we can start to look with a certain amount of confidence starting to go that direction a little bit more aggressively. We talked about that. A couple of the strategies to keep you in something all the time is to do the new buy daily strategy, which is essentially buying the new buy stock of that day in a portfolio at 2 to 2.5% of the portfolio account. Okay, and as they keep winning, so for example, this is what's left in that group. We've got a handful that are up 30-40% that have done pretty well. We've got a handful that are down in this range. We've got a handful that have been stopped out. Okay, and this is really for just the last few months that we've been using this and tracking this. It's about break even, nothing too exciting, but the market really has not really given a lot of opportunity. But we may see some of these that are starting now to build some momentum and start to work their way higher. That's one of the strategies, to just kind of be picking away at the market all the time. The other strategy is to go all in when you have a new buy, or excuse me, when you have a buy sell ratio that's above 1. So for example, the muscle stocks portfolio, one of the strategies you could utilize is focusing on those leading stocks, and when you have a buy sell ratio of 1. Okay, and there's a lot of different strategies you can utilize, and so that one is not necessarily better than the other. Not sure what's happened to my data here. Hopefully everyone can still hear me. Things have slowed down a little bit. Okay, there we go. Muscle stocks group, going into these high ranking stocks as the buy sell ratio moves back to 1. Okay, and then as they move back, you can do a stop loss, or you can use a hold signal or a sell signal, depending on the strategy. I typically will have these pretty tight because if they're going to work, they work relatively quickly. If not, they can get pretty volatile, and then they can just create a stop. So that's another strategy to be able to focus on, is only focusing on those uptrending stocks when you have a buy sell ratio of 1. That being said, it doesn't have to be the muscle stocks group. It could be a scan that you've created. It could also be from one of the indexes. So you may say, all right, of the Dow Jones Industrials, there's 17 stocks that are in uptrends, and I'm going to buy the top 10, okay, or whatever the case may be. These are, Dow stocks, they can certainly move, and they're household names, but sometimes it's kind of overrated in terms of performance. You can see that, really Microsoft, Intel, Apple above that 80 range. The rest have really not performed that well, and they've had big downtrends. They're starting to turn the corner though and start to move back up. For example, Boeing has had this big downturn, and now it's starting to bottom. This is kind of that bottoming process. So even though it's got a lower rank, well, it's because it's gotten clobbered, and it may be reversing the corner. That's one, or turning the corner. That may be, that's one strategy. The other strategy is already buying what's already in uptrends. So as we have stocks that are in this, the muscle stocks or smooth sailing group, they're already moving higher, moving that direction. This one isn't quite there yet in that upper momentum range, but that's one of the strategies to be able to focus on which stocks do I want to enter into during this uptrend. And I always recommend, adding multiple stocks, so that, you never know which one of those 3 or 4 or 5 are going to be the one that really takes off. You can always just, the new buy strategy daily also is kind of adds into that, to where you're getting multiple stocks. One of the things I'm also doing is you can add, now that we do have a buy sell ratio that is up, instead of buying the top stock, you could maybe buy the top 2 or the top 3, depending on how many positions you want to be taking on. Then that also gives you a little bit of diversification across different stocks that are already in those overall uptrends and working. Okay, so let's come back and take a look at, let's see, the commodities. We've been talking about oil, and oil has broken down now through this area. This is a good thing, I think, ultimately. So we want to see oil retracing, except for any of those oil stocks that we've got already. Those are also, starting to pull back, but some of them are stopping out with small profits. And in fact, I think we had, let me go back to this portfolio here and see which one was it. It was NHRG, excuse me, HNRG. Oh, good grief. Jesse, come on. Got my fat fingers here, and my COVID brain is foggy here. HNRG. Getting beat up here. I had a stop loss set just below that low point. So it was stopped out, continuing to accelerate to the downside. Now, let's talk about that, because in terms of money and trade management and stop management, we ended up getting in right here. It rallied, it gave us a decent little run up, it retraced, it started to weaken. Once we have a couple of different areas, then we can set a stop loss. And I always recommend doing that, trailing a stop loss as you're moving higher for this reason. Because sometimes you're going to get a sell signal here. It's pretty close though. You know, yesterday, if you would have taken the signal to sell and then sold it at the open, it's pretty close. You would have gotten out in time to avoid some of this sliding. But setting a stop loss once it's had a bounce, or even as it's been moving higher, you're like, okay, I just want to trail that stop loss based on a certain location. Using this 236 area is a good location, especially if it's held up there. It held up here for 2 or 3 days, and then it's got some weakness, and then set that stop loss. And then, you know, you're out of the trade as it starts to slide. That's going to happen. That's kind of what happens in these portfolios. Is you get an uptrend, you're going to get either a downtrend. Some of them will trace and continue higher. Some of them will stop out. Other new buys that you're adding into the portfolio, now you can take that cash, add it into a new buy today, which is going to be the new buy that went in today was AAOI. This was a nice trade this last year, where it went from here, you know, all the way up to 14, 15 bucks. Had a pretty decent retracement, but again, setting a stop loss at this 236. Let me drag this over. So if we were looking at this in real time and we're saying, oh man, this has had a big run up, it's holding, but it's starting to get some weakness here. I'm going to set a stop loss down, you know, below, let's call it at 11.78 or even $12, something like that. My stop loss, just in case it doesn't hold up here, it doesn't bounce, and I don't want to wait on these volatile stocks. Sometimes that sell signal happens a little bit later because it goes straight up, it goes straight down, and it's a momentum style algorithm. So if it goes straight up and straight back down, it's going to that stop or that sell signal is going to come a little bit later, like that. Okay, in this case, it happened with a gap as well. So a stop loss using a trailing stop is going to get us out somewhere in this neighborhood. And again, we're always going to play that game. Well, what if it bounced? What if we get stopped out and it bounced right here and then it rallied back up and it moved higher? Well, guess what we do? We wait for a yellow, we wait for another green. If that happens, then this is where we get back in. This is where we're out, because it's like, I don't want to play that game. It's going the wrong direction. What I want it to do is find support in that upper momentum zone and continue higher. So as it's moving higher, then adjusting a stop loss using, and that's one mechanism you can use. So in this case, it continued to fall, held up right there at that 50% for a little bit, and then just continued to drop. Now, this is back where we're at. It's held at that 618. Okay, this swing low and swing high of that entire move, it held right here at the 618. Now we're stair stepping higher. So this is actually, so now we would be watching for any pullback to hold this area, and then retest that area, and then break out of that area, and then retest that area. All of these areas, all of these zones become ranges to be watching. And as it breaks through that, you get a little more confirmation of that trend moving higher, solidifying the confirmation of that overall trend. But this was the new buy signal today. So that one got stopped out, rotated out, add in something new that may end up performing better than that oil stock. Okay, so it's really it's almost like a daily portfolio rebalancing, because we're adding and subtracting stocks essentially each day. That you can stretch that out if that's too much, too intense to be able to do that many transactions, to something slower. Maybe it's not every day, but maybe it's every other day or once a week or whatever the case may be, and watching for those opportunities of stocks that are starting to have new trends to add into a portfolio. Let's see, I'm going to jump back to now. Remember, you can do that on any of these other scans as well. For example, Muscle Minis is looking for low price stocks, $3-4 stocks. That one looks a little funky with maybe a buyout. Okay, different, just different scans for different criteria, and then obviously you can create your own. We've talked about that a lot, to where you can take your scan, and I can say I want only, you know, only really high earning companies right here. That's got 10. Sorry, I'm skipping all over the place here. Let me just jump back to the scan here, BVH. Okay, so in this case, this scan has got that one's not an accurate data, DAKT. Here's an example of that scan, 10, 10, 10. These are all very high earning companies, and what it's measuring is this number here, ROE, increasing by at least 10%. This is at 34. This is at 10 as well. Okay, so you can add some earnings. You can create whatever scans you want to be able to focus on what's working in that market environment. Now we've also got the market on our side here a little bit, where we've got something bullish and market conditions are working. I've got a slow connection here. Hopefully that sometimes affects my audio here as well. I'm going to, let's just summarize here. Market conditions, we'll come back to that if it's going to load up for me. Don't know if it will, but buy-sell ratio is positive. Let's look at S&P 500 here, and we'll finish up on that. So S&P 500 for the last year, okay, this 61850 retracement. I'm actually going to pull up this longer time frame here because it's a little bit more accurate. I want to pull in that low point. I want to pull in this high point here. Okay, so now we've got all of the ranges that we were talking about, this really thick range of support and resistance. It's held up. It rocketed through that, even rocketed back up above the 236 now. So we're back in the momentum zone on the 2-year, probably not quite there on the 1-year, but all good things for market conditions to continue to move higher from these levels at this point. Now, again, the intensity of the move happened pretty quickly. I wouldn't be a bit surprised for a little bit of pause right here, but we're still inside of that buy zone for S&P 500 and back up above that 236. If we can even break up above all of this resistance right here around that 433, 434 range, even more so, even more positive for the upside. That'll do it for today's update. Appreciate everyone's time and effort, and we'll see you on Thursday. Thanks a lot. Bye now.